Disclaimer: the insights and opinions shared on this show are for educational and entertainment purposes only. Before making any financial decisions, we recommend consulting with a qualified professional to better understand your unique financial situation. Welcome to the Investors Playbook Show, where our mission is clear: empowerment through financial education. We firmly believe that financial freedom isn't a privilege, it's a right that's available to everybody. Each week, we dive deep into the world of finances, breaking down complex topics and making them accessible and actionable for everyone. As we grow this community, we invite you to join us on this journey. Why tune in? Because together, we're not just learning about wealth, we're building a movement, reshaping futures, and proving that with the right knowledge, financial success is within everyone's reach. It's time to get off the sidelines. Let's go.
Welcome to Investors Playbook, episode 24. I'm Cornell Rowan.
I am Deshaun Edwards. And before we dive into this episode, we got a couple of announcements for you guys. First and foremost, Investors Playbook is coming up on its first year of business existence. February 28th, we'll make officially 1 year that Investors Playbook, the LLC, has been around. Another thing that's happening on February 28th is we are doing our second webinar where we are teaching individuals all about mutual funds, which is a huge topic because we, as Investors Playbook, talk a lot about the importance of making sure that you are consistently putting money into the stock market. Mutual funds is a great way to do it. It's a safe way to do it because the way mutual funds are structured, they can offset some of the stocks that are inside. But we'll dive into that. Come join us February 28th. What is it, 4 o'clock PST? And 7 o'clock Eastern Standard Time. Yeah, so we're gonna make sure that you will have the Eventbrite link on our Instagram, and we'll re-talk about all the Instagram where you can find us at the end of this episode. And then we also have our first official book fair that we're going to April 20th in Conyers, Georgia. So excited about that. We also still have the book for sale on Amazon. Check it out. 6-step process to financial freedom. But yeah, we have a book fair coming up April 20th, and we have our second official webinar on mutual funds coming up at the end of this month. So check us out, man. All right, Cornell. I think that was all the announcements. Was there anything else that we wanted to hit on? We good?
No, I think we're good. I think you hit those points really well.
For sure,
So
for sure.
of course, last week something big happened.
Mm-hmm.
The S&P 500, it hit an all-time high. It is now at $5,026.
Wow. That's a lot, man. Like the fact that the S&P 500 just keeps showing consistent growth. It seems like a monster that's not going to stop. But I mean, it's exciting because again, this is new territory. My thing is, with this information, what would you, I guess, suggest or recommend? How will people handle something like the S&P 500 going to $5,000? Because are you yourself also invested in the S&P 500 or not?
I am not investing in the S&P 500.
Mm-hmm.
But I feel like the S&P 500 is like it's the staple of investing in the stock market. When people talk about the stock market, they're normally talking about the S&P 500. Most people feel like that's the best investment. I personally don't invest in it because I feel like there are better returns out there. I feel like it's been easy since I've been. I'm not saying that it's always going to be easy, but since I've been in the stock market, it's been pretty easy for me to beat the returns of the S&P 500.
Yeah.
They make it seem like it's a hard thing to do, but I really don't feel like it's that hard to do it.
When you really think about what the S&P 500 is, and let's talk about that too. What exactly is the S&P 500, right? The S&P 500 is an index fund that tracks the movement of 500 companies, and they rank those companies, the top 500 companies. They rank those companies based off of market cap. So you can imagine some of the larger holdings of S&P 500 are going to be your, Meta, your Apple, your Tesla, your Nvidia, like all of the big companies that have been doing really good, the ones who have market cap that are over like $1 trillion. Those are the ones that the S&P 500 hold heavy in. But of course, it has 500 companies, so it's not just those top 10, top 20. Um, but yeah, essentially, it is a fund that is a culmination of a lot of different stocks. And to your point, Cornell, because the S&P 500 does track all of those different stocks, it's not going to just move as high as, a single stock like Meta or Amazon. So like you said, you can easily beat it, but that comes with, making sure it's like you got to be more of an active, not even trader, just an active investor, knowing what companies to invest in. You know what I mean?
Do you
So
have to be more active?
I think that, well, not necessarily more active, just knowing what company to invest in so that you can beat the S&P 500. Because you can invest in a company that's in S&P 500 and it won't beat the S&P 500, and you can invest in a company that's in the S&P 500 and it will. Like if someone put the same amount of money in Tesla that they did in the S&P 500, where would they be at now? It just, you know what I mean? It depends
It
on
de-
which one
it depends on when they invested, of course,
and when too, and when. Yeah,
right? Because Tesla just a year ago was parabolic. You see what I'm saying? The
that's true.
the um the returns on Tesla were ridiculous, and I feel like
Yeah,
Tesla's cooling off from that right now.
right, right. Yeah. So I guess essentially the S&P 500 is, like you said, one of the index funds that a lot of people talk about, because it's almost like the introduction for a lot of people into the stock market. It's This is the stock market, and this is a index fund that holds or tracks a number of stocks. If you just keep putting your money in here, you don't even got to look at the stock market anymore. And I guess that's like an easy way of introducing someone into the stock market. But when you start digging into different companies and seeing which company is doing better, that takes, and I guess not even a whole lot more research. It just depends on the person. How many more companies do they want to look at or invest in? But I think to your point, like you said, like why do people just turn towards the S&P 500 all the time or so quickly, and that be like the staple? I just feel like it might just be an easy way to explain the stock market to someone who's a beginner. You know what I mean?
I think it's definitely easy. I guess my thing is there are businesses out there that have a long track record of beating the S&P 500. So
Yep.
my thing is with this, like Apple, Microsoft, Amazon, Google, all of them being one of them or being some of them, right?
Hmm.
So my thing is it does open you up to more risk because if something happens to one of those companies that you're invested in, you kind of feel the full force of it, right?
Yep.
But you also feel the full force of all the gains that happen because in the S&P 500, as you said, there are 500 stocks.
Yep.
So if you're not just investing in Microsoft, you have 499 other stocks that could be holding that down. So if Microsoft blasts off, you're not going to see as much of those gains. But also, if one of those stocks were to plummet, you're not going to see as much as the loss. So it caps off both your gains and your losses. So while it's safe, you can still it can still keep you from making as much money as you would from purchasing a single stock.
Yep. Yeah, man. So yeah, the S&P 500 is an interesting one, and like we said, it's hit a all time high. Where do you think the S&P 500 is going to go from here, though? Do you think it's going to continue raising, like, or how do you feel it might move after it hit this $5,000?
I think the stock market is ready to go up. So even if we have a drawback, it's going to come back up. Like if you look at what's going on now, how many times have we had a decrease in the stock market or a crash in the stock market? Right now we are at all-time highs. So that means no matter how many crashes we've had, it has recovered every single time. That's
Mhm.
why it kind of irks me when people say investing like gambling because it's not. If no matter we're at an all-time high, so no matter when you invested in the S&P 500, you're up right now.
Yeah.
All-time high.
Literally does not matter when. I think people, and I want to talk more about that. It might not happen in this episode, but I want to talk more about like the mentality of people when it comes to the stock market, why they even think stocks are like gambling.
Why not talk about it?
Well, we could. I think the misconception comes from ignorance, people not even knowing what the stock market is. I feel like a lot of times, and I compare it to someone who told me that Inglewood is dangerous and they've never been to California. You know what I mean? They just see stuff on TV or they hear people talk about it. So that makes it true. And then it's not even just, it makes it true for them. They start to speak that truth to other people. And unless you've experienced the stock market and like experienced the loss and the gains, and if you did that, you would see it's not gambling. But I feel like the people who say that are the ones who just have never dove into the stock market. They just heard from someone else say that the stock market is like gambling, don't touch it. And then it just continues to spread.
I think
So,
I think you're absolutely right, man. Because those are usually people that I hear saying it's like gambling. People that are not actually actively investing themselves. They might have
mhm,
like a 401k, but that's not by choice. You see what I'm saying? Most people that are in the stock market don't even know they're in the stock market.
yeah,
So they say 61% of Americans are in stocks, are invested in stocks. But let's think about how many of those people are just 401k investors.
right, right.
Pretty sure it's a
Probably,
large amount of them.
probably a large number of people who are not actively investing. Well, I guess it's considered actively, but you get what I mean. Like it's more passively investing
Yeah.
because it's done automatically through their company. They have like a timed retirement mutual fund that they're investing in.
And they don't
Yeah,
even know what they're invested in. They just know that their money's going into this account. A lot of people don't even know that they're investing in the stock market.
yeah, yeah. So, and I think you're right. Um, the stock market is just going to continue to go up. I and every time it hits a new high, I hear people saying, "Oh, the stock market is way too high. I can't go above this." I mean, just look at the past forever since the stock market has been open. It's only done positive. It's only gone up. Why would it not continue to go up? You know, what would stop it from going from 5,000 to 6,000?
I think that it's tied to our economy. Like we are continuously developing,
Yeah.
with tech being the fastest developer.
Hmm.
You see what I'm saying? That's why all these tech stocks are surpassing everything else. If you look at the returns from QQQ, the top 100 stocks from the Nasdaq,
Hmm.
and you look at the S&P, QQQ is actually performing a lot greater, is giving better returns than the S&P 500. So as far as the S&P 500, over the last year, it has a return of 21%, which is crazy, which is really good because remember, stocks average, well, they say average that you'll get in returns from stocks is like 7 to 11%.
Hmm.
Last year, 21%. So
Yeah.
over the past 5 years, it's 81%.
That's wild, man.
It's wild. But when you look at QQQ, which is NASDAQ, which is tech, over the past year, it's up 43%. So
5 years, over 150.
yeah, 5 years over 150%. So it's almost doubling the returns of what the S&P
The
500
S&P
is doing.
500 is doing. Yeah.
So going back to when you asked me, do I invest in S&P 500? No, why? For what?
I think the main reason is it's recommended because it is simple. I think that's the best explanation I can think of. It is
It's
a
cute.
simple thing to explain to someone. Invest in this, which invest in all these companies. If you invest in the S&P 500, you're also invested in Meta and Tesla and blah. You know what I mean?
I have a question. Is
What's up?
QQQ not simple?
No, QQQ is simple too.
It's just that simple.
But see, even talking about I think QQQ is one that people should invest in as well. And I'll even go further and say, look at the Dow Jones too. Like what? That's another large index fund, right? Those top three: S&P 500, Nasdaq, Dow Jones. And I don't know what the Dow is doing in comparison to
Uh,
the S&P 500.
Dow is not outperforming S&P 500. It's like half of that. So I personally would not invest in Dow Jones. But as far as tech has been the fastest developing sector for a long time.
And I think
I
it's going to keep being the fastest for a while too,
Yeah,
honestly.
yeah, especially with AI out and things of that nature. Why I just don't understand why people are constantly telling people, "Hey, do the S and P, do the S and P," when the top the top holdings of the S and P are tech.
Because it's how they've always done it, bro. I think a lot of times people just do what they're used to and they don't switch up. Because I agree with you, man. The QQQs, it's literally evidence is there that shows it's doing better than the S&P 500. The S&P 500 hitting 5,000 is very important and it's monumental, but it's just a number and it's a feel good. We got to look at the percentage gains. That's what really matters, right? Like over a year, how did it do? Over 5 years, how did it do? Let's compare it to these other index funds. Doesn't make sense to keep putting money in the S&P 500 rather than putting money into something that's literally blowing it out the water and has a track record of blowing it out the water and has a future side of possibly continuing to blow it out the water because you got, like you said, AI. You have new tech companies that are popping up all the time, and then you have these tech companies that are acquiring like this new technology. We're gonna be in the technology age for a while. Like we're gonna be here for a long time.
I don't see
You
it
feel?
stopping.
Yeah.
What would make it stop?
I don't know, because when you think about everything that's happening, it's still related to technology, like the artificial intelligence, the digital age, us going into like the Apple glasses, using augmented reality. All of that is technology. All of it is tech.
Right,
You
and
feel?
every sector needs technology.
Yeah, every sector needs tech. So
Yeah, healthcare, automotive, like
especially health.
everything.
Yeah, yeah.
So
And a lot of companies who aren't even technically like, if you look at the company itself, it's not. It's like Tesla. Tesla is a car company, but they consider it a tech company almost. You know what I mean?
yeah,
Almost. It's like it has new technology that's associated with Tesla. It is an automotive company. But there are a lot of aspects of Tesla that utilize tech, right? Like different microchips or like the smart driving, like all that is tech.
yeah,
You know what I mean? So yeah,
for sure.
yeah.
So let me ask you something. During
Mhm.
like while the S and B, because we know that it's not just a straight line up, right?
Yes,
When it comes to investing, it's not just a straight line up. So when say you invest in something, right? I just want to know your strategy for what happens if you put money into an investment that you felt really good about and it has a good track record and it plummets. What would like how would you handle that situation?
I would add more. That's that's like buying something at a price that was higher than you, not even really higher than you wanted it to be. You caught it at its most expensive. But if it plummets, yeah, man, I would just buy more. Because if you look back at the year, 5 years, it'll more than likely go back to that price, right? One thing that I would not do is dump it out of fear, like getting rid of it because I feel like it's gonna go away or my because and then with stocks, when you buy them, you can hold on to them. It's not like options where you have a time of expiration. So yeah, for me, if I buy something, I see the price go down, I will just continue to buy more. For especially if we're talking about something like the S&P 500 or like an index fund. Um, yeah, my that's what I would do. I would just buy more
Got
because
you. And
now,
I
go ahead.
and I can see what you mean because it's kind of like you're catching it on sale, right?
Exactly, and
So
that will even offset me buying it at that high price. You know what
yeah,
I mean? Like if let's say for example the S&P 500 is at 5,000, I purchase some S&P 500. Monday comes and it drops all the way down to $4,500, which is huge. But let's just say that happened. Yeah, bro, I'm finna buy more S&P 500 because it's not going to not go back up to 5,000, right? History has shown that the S&P 500 continues to go up. Unless this world tragically flips upside down, like it's going to, like history more than likely is going to repeat itself with the stock market. And it's not even just going to repeat, but it's going to exceed what it's done before because technology is increasing, prices of everything are increasing, businesses are getting bigger. And I feel like, yeah, it's just going to keep growing. You know what I mean?
Yeah.
Yeah. What about you?
I think the same thing. Like I'm going to dollar cost average. As it goes down, I'm going to continue. Really, I never buy stocks at the all-time high.
Right. Right.
Never. I don't care how much I like a stock. I'm not going to buy it at its all-time high.
Right.
So every 2 weeks, and this is another reason why I don't have automatic payments or automatic invest, because I like to choose what I'm going to invest in every 2 weeks when I get paid.
Mm-hmm.
So when the 2 weeks hit and I get my check, I'm looking at, okay, what's the furthest, what stock that I like is the furthest away from its all time high. And that's where I'm putting my money.
Yeah. Yeah. That makes sense.
Yeah,
Yeah. I think
because
again, oh, go ahead. I was gonna say when it comes to the automatic investing, it's all about just ease. People probably don't want to look at that every 2 weeks, and that is a very hands-off method. And I mean, it could work if you are choosing to always invest in the same thing, like you said, dollar cost average every 2 weeks, and yeah, you'll eventually start to see gains. But your method is you'll see gains a lot faster. You know what I mean?
yeah,
Because you are selective in what you're purchasing. You are selective in when you're purchasing. So you can catch things on sale, right? And yeah, it's methods to it. If you're more of an active investor like yourself, then yeah, it makes sense to not do automatic investing because you'll buy things like the S&P 500 when it's at $5,000. You feel me? So
yeah,
yeah,
yeah. Because like when things are on their all time high, you can expect a pullback. Nothing is just going to go up
right.
and never go down. So yeah, we're probably going to see a pullback at
Yeah,
sometimes.
I think so. I think so. Yeah, I
And at
agree.
that time, I'm still not going to invest in the S&P 500, but I'm going to look at the I'm going to look at the companies inside the S&P 500 that I like, which are really like the top 10 companies, because if they're
Mm,
performing the best, why wouldn't I invest in them? So I'm looking at that Microsoft, that Apple, that Nvidia, that Google. I got a few that are not in the top 10. I got my AMD, things like that. But most of my holdings are in those top 10 companies, because
which
those top 10 companies, if something happens to them, the world is changing. Like if
yeah,
Apple were to just go away today, what would that look like? Microsoft just goes
that
away.
remind, yeah, you got
What would
some companies that can disappear and won't affect people's lives, but pretty much the ones at the top 10 of the S&P 500, lives are changing if that happens, right?
for
Apple
sure?
goes away, we got to figure out a whole new, way to do our podcast, right? Like I use a MacBook and an iPhone, so I got to figure that out. You know what I mean? So that's just an example, but I get
And,
what you're saying.
and it's not just that, man. It's even more of a necessity. How many of these businesses run their business through the app store of Apple?
Yeah,
Like
that's true.
Apple is an entire ecosystem. So
Hmm.
yeah, like we use it for our day-to-day communication, and we use it for like our FaceTime, like just fun stuff, like little games on the phone. That's cool. But you got to think of like our banking. You see what I'm
Yeah,
saying? How we go through the apps. People pay, businesses pay Apple just to be on their app store. And it's
yeah,
not a little percentage. I want to say it was like 20 or 30%. It's crazy.
yeah. It's a lot. Yeah, a lot would change, but that is the more detailed look into, not even detailed. It's just it's right in your face when you think about it. Like, what companies do you use every single day? What what products do you use every single day? These are the ones. These are the companies you should probably look into investing, because they're more than likely not going anywhere. And if they do, like, go somewhere, like, yeah, you got bigger problems. You know what I mean? Yeah. So,
I agree
yep.
for
But
sure.
yeah, um,
Yeah.
yeah, S&P 500 it's one of those well talked about when you're talking the stock market to somebody. It's always, have you seen the S&P 500 lately? But yeah,
Yeah,
there
and
there
uh,
are there
it
are
I I, I promise you that irks me, man, because it's just I had a great conversation, and I really do think that it's just people not knowing. Because I had a great conversation talking to someone about that, and they were asking me why I didn't, the same conversation, why I didn't invest in the S&P 500. When I showed him, like I literally showed him the returns of QQQ, and I said that this is why I don't do that. He like I changed this man's whole perspective on the stock market.
Mhm.
So yeah, just because everybody talks about something doesn't mean it's the right thing to do.
Right.
Have your
Right.
own mind, do your own research. Just because we're saying something, don't just, it's a lead for you to go and do your own research
Exactly.
and figure out what you want to do. Because
Mhm.
we're different. What works for me might not work for you. We have
Right.
different thought patterns. We have different yeah, discipline. Like what I do is not what you do, and what you do might not be what I can do. So yeah,
Mhm.
just think for yourself.
Yeah. And we're not saying that investing in the S&P 500 is bad. It's just the numbers don't lie, right? There are better ways to invest in an index fund, right? Um, yeah, it's yeah, yeah. So just like you said, man, do your research. Don't just take blind advice, because you could be
Because
missing out on some gains, man.
yeah, because remember, I feel like this is the same conversation from when we first started in the mutual funds, and that fund manager put us into that freedom fund, that freedom
It's
2050 fund.
so
You see
bad,
what I'm
bro.
saying? It was bad. We weren't making money, but we
I
did
wish
our
I could
own
look at
research.
that fund. I wish I could remember what that fund was, so I could look at it and see how it's done.
It was like
Oh,
freedom. It was a fidelity fund. It was like freedom 20. It was either 2040 or 2050. I don't remember which one they had us in. Whichever one that we were in retirement age for.
I think it
But
might have been 2050.
maybe.
Right.
But if we had just listened to this professional, somebody that does this for a living, we would not even be near, we wouldn't be making near what we're making now. And this is why I say, no matter who tells you anything, even when we tell you something, even if you read it from our book, do your own research. Make sure it makes sense to you. Don't sit here and blindly follow somebody just because they look like they know what they're talking about.
Yeah. Bro, if this is the right one, I'm looking at the Fidelity Freedom Fund. That joint for the past over the past 5 years, this went up 10%.
10%. The S&P 500 went up 81%.
The QQQ went up 150%. And this joint
150%.
this joint went up 10% in the past 5 years.
They are
And this is a
it's like
recommended.
it's like
This
it's intentional. It's
is
like
a
it's
recommended.
intentional.
Yeah,
And
it
this is
has to
what
be. It
people,
has to be like a like a commission or something. If
bro,
you can get as much people as you can inside of our Fidelity mutual funds, you get a bonus. Like, it has to be, bro,
bro,
because this
bro.
makes no sense. This is it's just not a good recommendation in any way possible, like, at all. Over the full, like, over its lifetime, 24% since its existence.
And bro, this is, and it kind of makes me mad because think like we looked into it, and that's the only reason why we got out of that. You see what I'm saying?
Exactly.
Think about how many people that they have into this stuff,
Yeah.
and they've had their money because that was like 8 years ago. You see what I'm saying? Do you know
Mm.
how much in gains that we've had since then?
Bro, they rated this 4 stars. I'm trying to understand it. Like,
Bro, it's intentional, man.
it's
It's
like, are they
intentional,
trying to have
and
people
it's
not make
sad.
money? Yeah,
It's
that's
sad.
that. it's like as much as you want to be a passive investor, it's really hard to like say, yeah, that's cool because stuff like this. You want to be actively looking at everything you're investing in your 401k because they probably if you didn't look at your 401k when they set you up, you probably invested in a retirement age fund that's gonna be the exact like 2050 fund or 2045 fund, and it's probably it more than it is not doing as good as the
It, pro-
S&P 500 as the
it
QQQ, and yeah, so
yeah.
you have to pay somewhat attention to it. Like, yeah, you can't just take advice and just run with it. You got to look into it yourself. And like you said, if we didn't do that, we would be, bruh. It would be we would be talking about a whole different thing, bro.
Yeah.
We'd be talking about a
Stop
whole different.
stop floating through life.
Yeah,
Get off the
yeah.
sidelines. Don't be a floater, man.
Drifters, man. Folks just be like in the
Drift.
lazy river, just going, bro.
I'm saying that is a good analogy. People just
They be in the lazy
coasting, man.
river.
And I
They be like, "What you mean?
understand.
I'm swimming. What you mean? I'm in the water." I'm like, "Yeah, but you passed this exit like 6 times. When you gonna like look at where you going? When you gonna look at where you going, bro?
Yeah.
Because yeah, yeah, I don't know, man.
Yeah.
This is crazy. I'm glad that you brought that up because that it's wild the fact that we and this isn't even something like the goal is to try and figure out what to do, seek guidance. This was guidance from someone who works at a reputable brokerage saying that you all should invest in this. I feel like that was just like that's a script, man. He wasn't trying to help us out. You
Mm-mm.
feel me? He
No.
wasn't trying to help us out.
Like, man, that's crazy.
Yeah, that's wild. That's
It kind of
wild.
it makes me mad now that I think about it. Like I'm mad all over again.
Yeah, yeah. We need to call him back and be like, "Hey, bro, you remember when you recommended that?
For real though, man.
Why did you do that? I want to know what made you think. What made you think that that was a good recommendation? Yeah, because yeah, man, I don't know.
And I think your aunt,
Yeah,
or because
he
if
definitely, bro.
she opened our eyes, because if she
Yeah.
didn't show us what she was in,
Mm-hmm.
then we wouldn't have. And the thing is, I remember because she was like with Voya. No, she was with, who was she with?
You talking about Kaiser? Not Kaiser. Children's Healthcare of Atlanta.
No, what brokerage was she with?
Oh, I don't remember the brokerage. I don't
So
remember the
she
brokerage.
she was in a brokerage, and we had to, like, it had like a minimum, so we couldn't get into it.
Yeah,
And we
we
were
couldn't
like,
even
dang.
invest in what she was invested
Yeah,
in.
we were like, dang, man, look at her return. So this is when
Yeah,
we were like, wait, we don't have to invest with what she's in. Why don't we just look for whatever has the best track record in
right.
what we can do? And then that's
Yeah.
when we started comparing like mutual funds and stuff. And then
Hmm.
we got into the one that was doing the best. And guess what? It's tech. Like the
Yeah.
the mutual FSCSX, that's
FSDSX,
tech.
bro. That
That's tech.
went crazy, bro. Went crazy. Fidel, the
Still
one that
going
was
crazy.
recommended to us past 5 years went up 10%. Let's see. FSCSX past 5 years, bro, 62%. Come on, bro.
And that's a
Like,
mutual fund.
that's a mutual fund.
So it's not up like the QQQ,
No, it's
but
not
but
like the QQQ.
but it is. Hold on, you said 5 years? FSCSX?
Yeah,
Dang,
I'm looking at that
it's
right
not
now.
even it's not even beating the S&P 500.
Nah, it's not.
Yeah, we might need to change that.
Man, need to shift gears on this one, bro.
Ah, this was a good one. This let us know. And see, this is something, and see, this is why it's important to actively look at your portfolio, because FSCSX, we bought that so long ago. Because I want to say I was like 9 years ago. We bought it
We
so
bought
long
that
ago
a
that
minute
we
ago.
never really looked back at it.
Yeah,
So because right now I'm up 239% in FSCSX now
let's
that I'm
see.
looking at it. And this was 9 years ago. So it looks like, because is the S&P 500 up that much? Nah, I think
Over
this
the
is being the
last 10
S&P
years,
500. Yeah, I think this is beating the S&P 500 because I don't think over the last 10 years S&P 500 is up 239%, and that's what I'm up right now in FSCSX.
Yeah, I don't think it S&P is beating it, but the Nasdaq, I mean the QQQ is.
It is. So I might need to change. I might need to make a change and do that. But a good thing is we are beating the S&P 500, but
Hmm.
but we see something that has a better track record, which is QQQ, the top 100 stocks in the Nasdaq. So that might be a better investment. And see, now that we're seeing that and we recognize that, we can make that change, and we're not just sitting here on the same stocks for life,
Yeah,
never changing up our portfolio.
yeah. I'm up 300% in FSCSX.
Yeah, and see, I
Yeah.
kept putting into it after
Yeah.
probably like,
So
yeah, that's
yeah,
why your
that's probably
percentage.
exactly why you bought it at a higher. Yeah, that's exactly why. Because I started putting the money into my Roth into different investments, and they and this just me trying to look at what else could do good, but none of them have been doing as well as FSCSX, bro. But like you said, now maybe the QQQ is what I just need to start putting money into, and just
Yeah,
maybe even I don't know, taking the gains out of FSCSX and then
that's what
putting
I'm
it
gonna
all
do.
in the QQ. Yeah,
I'm putting everything, gains and
yeah,
yeah.
yeah. No point in not, bro. QQQ is one of those that's moving. So, but yeah, I think this was a good conversation to open up what we talked about, which is, bro, be an active investor. You don't got to be an active trader. You got to look at the stock. You don't have to look at the stock market every single day. You got to wake up at 6:30 PST when the market opens, or six o'clock and check the pre market. You don't have to do that,
You don't
right?
have to be us.
You don't have, right. You don't have to do that because we're literally up every morning, bro. But I think it's good to see where your money is going and how it's growing so that you can make those adjustments, right? Um, yeah. So it's an easy way to invest, and then there's a better way to invest. And yeah, just looking at, I feel like even the better way is easy too. It's just it takes this much more research, right?
Every 2 weeks, just look at your phone. Be like, hey, which one of these good stocks are furthest from the 52-week high? Okay, put it in there. That's it. That's
That's
all
it.
you're doing.
And that is the perfect way of, everyone always hears that buy low, sell high, but buy the stock that's at its lowest. Look at, like you said, look at which one of these stocks in the S&P 500 and the QQQ that is furthest away from its highest. Put your money in there. That's a great way. That's a great strategy. You feel me? So, all right, man. I think that pretty much wraps up this episode. This was a good one, bro. It got
It
us
was.
looking at our own portfolio, seeing what we need to change. You
I'm about to
feel
make some
me?
changes. I'm like, hmm.
Come tomorrow, it's like, maybe, yeah, let's shift this stuff around a bit.
And see, it's those things that you bought so long ago that you don't even think about. And it's like, yeah, I should probably change this. So yeah, I'm gonna make some revisions to my portfolio tomorrow for sure.
Hmm. Yeah, I'm with it.
All right,
All right.
so tell them where they can find us.
Oh yeah, absolutely. So of course you can find us on Instagram, Investors Playbook LLC. You can find us on YouTube, Investors Playbook LLC. Website, www.investorsplaybookllc. Catch our book on Amazon.
.com.
Oh yes, .com. Investorsplaybookllc.com. Catch our book on Amazon. You can either type in Deshaun Edwards or Cornell Rowan, or the title of the book, Investors Playbook: A 6-Step Process to Financial Freedom. We are 1 month, a little more than 1 month into 2024. All right. The goals of this year can still be achieved, but you have to take action. You have to get off the sidelines. You have to start something, right? And that book is a perfect way of getting started. It is a quick, actionable read that allows you to literally get off the sidelines, start doing things like getting your money right, investing in the market, making sure that you have your self set up for financial freedom. That's the whole goal of the book. Um, Spotify, Apple Podcasts, where you can listen to this episode. I think that's it. Did I miss any of them, Cornell?
Nah, I think you got it, man. And
Cool.
we'll have the Eventbrite somewhere on the IG
Yep.
or on the website so that y'all can easily access it to tune into our workshop. We'll be
Absolutely.
talking a lot about mutual funds. So
Cool.
Let's
Man,
go.
well, look, appreciate the people that showed up. We had some folks from Atlanta come in. We had some folks from LA. Yeah, this was a good one, man. Thank you all for tuning in. Yeah.
Thank y'all.
Thank
We
you
love
all.
y'all. Straight up.
All right. Later.
Peace.